series of events co-hosted by the Crypto Valley Association, together with Bitcoin Suisse, and connected to our Bitcoin Suisse Themes initiative from our research department at Bitcoin Suisse. The topic of cryptocurrencies for corporate treasury maybe doesn't sound like a super interesting topic. Of course, corporate treasury, liquidity management, treasury management, those are usually the topics for accountants and CFOs and number crunchers and so on. But I think, as everybody knows, during the last few months, this has become a rather hot topic in the last 6 months or so, when some pretty prominent companies around the world have publicly declared that they will start allocating some of their treasury assets to Bitcoin and to cryptocurrencies. These are companies like Tesla, MicroStrategy, Square, Rougher Investment in the UK. And actually just this week, we had the announcement from WeWork that they will start accepting crypto payments and they will hold these crypto assets on their balance sheet. So that's why this event perhaps is quite timely. And it's also the subject of our recent Bitcoin Suisse Themes research paper, which we published on Tuesday. Of course, we have other research which we published from Bitcoin Suisse. Very much encourage you to check that out on our website. But this paper takes a look at the case for Bitcoin as a corporate treasury asset, as well as the case against Bitcoin, because we try to take a balanced view, and also some aspects with what companies might need to consider if they want to take this step. So in the first part of today's event, we'll hear from Dr. Raphael Huber, who's our head of research at Bitcoin Suisse, and he'll dive into the paper and explore some of those aspects which I just mentioned. And then in the second part of the event, we'll open things up for a hopefully lively discussion with several panelists with different perspectives on the topic. And there will also be the possibility for you to take part with questions. As I understand, there is a Q&A function at the bottom of your screen, so you can just type in your question there, and as time allows, we'll take as many questions as possible. So with that, I'll turn things over to Raphael Huber, who will be talking about our themes publication and about the specifics of cryptocurrencies for corporate treasury. Raphael?
Yes, Ian, thank you very much. So it's a pleasure to all have you here. And let me just start by sharing my screen very quickly. So I hope you can all see this now. Like Ian already mentioned, the topic of today is cryptocurrencies for corporate treasury. And I would like to start my presentation with a quote from Michael Saylor, who is the CEO of MicroStrategy, one of the earliest companies to actually allocate to Bitcoin where it's not their core business, crypto in principle. And he mentioned that they just had this awful realization that they were sitting on a huge pile of cash worth $500 million that's melting because of what the central banks are doing and so on. And they were looking to deploy it in some way where their wealth is actually better stored than in cash. And they came up with Bitcoin. So that's a little bit of background already on where we are coming from with this paper and why cryptocurrencies for corporate treasuries is actually an important topic right now. In the next 20 minutes, I would like to briefly introduce the topic and how crypto is now actually going mainstream during the past 12 months. Then, like Ian already said, in the paper, we first make the case in favor of Bitcoin. So what are arguments that these people typically bring up in favor of Bitcoin? Then also, what are some of the risks associated with it, first in general, and also from a company perspective. And last but not least, a little playbook of what a company should consider when considering cryptocurrencies for their corporate treasury. And then we'll round it up with some key takeaways from our Bitcoin Suisse Themes. So let me start off with a simple price chart of Bitcoin. And here already it's pretty evident that interest in Bitcoin has been rising over the past 12 months. Bitcoin actually had its first little bubble in 2013, where the prices rose above $1,000, which is now barely visible on this chart. And then we had the second hype phase in 2017, and everybody was talking about how now our institutions are going to buy Bitcoin and central banks and whatnot, and none of that happened at the time. And then the crypto markets were pretty calm. And now only after the Corona crisis, the Corona crash, March 2020, when Bitcoin had a sudden drop down to below 4,000, people started again considering a bit more, also because of what developments in the world were going on, whether this is actually something to think about and to consider. And then as Bitcoin broke its all-time high, it was now pretty clear that some people had a strong interest in buying and holding this asset. So at least it's worth to think about it and to make to form an opinion. And that's also what we wrote this publication for, really to provide an overview of some of the arguments and points that are often made in relation to this. So of course, like I mentioned, MicroStrategy, one of the first companies to accumulate a large amount of Bitcoin. They have now accumulated more than 90,000 Bitcoin since August 2020. And it was actually one of those catalysts that reignited some of the sparks in the crypto markets. MicroStrategy is a large company, but it is perhaps not as well known as another player that has joined the crypto world, which is Tesla. And Tesla very publicly announced that they have invested $1.5 billion into Bitcoin in January 2021 for a total of around 48,000 Bitcoin. But it's not just companies that are now getting interested, or that have been interested for some time now. It's also other notable investors like Paul Tudor Jones or Stanley Druckenmiller. So macroeconomists, hedge fund managers all start to think about what is behind this asset, what is behind Bitcoin. Does it actually, what is my personal opinion about it? And Paul Tudor Jones, in his investor letter in May 2020, wrote that he was looking for a hedge against the great monetary inflation, which he expects to come because of some of the policies that monetary and fiscal policies that are now happening around the world. And the question really that we wanted to answer, or that we wanted to give input on, is, are cryptocurrencies and Bitcoin specifically a viable option for corporate treasuries? Let me first line out some of the arguments that speak in favor of Bitcoin as a treasury asset. So, like I mentioned, we are now seeing extremely loose monetary and fiscal policies by central banks and governments around the world. This has stoked some fears of inflation. Yields on cash are very low. And especially if we are thinking of inflation, what does the market actually think? We have seen the yields, the 10-year yields in the US actually spike very recently above levels that have not been seen for quite some time now. And on the other hand, if we look at what Bitcoin represents, Bitcoin is independent, both politically and from any monetary policy influences. It has a fixed monetary policy given by the protocol. Is 21 million Bitcoin is the maximum that will ever be available, and actually a little bit less if you consider that many of the early Bitcoins have been lost. So those that were generated in the very early days where it was not valuable at all, those have actually been lost. So the actual number of Bitcoins that are potentially in circulation is even lower than this 21 million Bitcoin. And on top of that, the inflation of the supply, the policy of the supply inflation is very well known. It's defined in the protocol and can be looked up at any point in time. Now, a bit more specifically for corporate treasuries, Bitcoin could also serve in the longer run as a sort of bridge currency for multi-currency portfolios to easily interact with multiple economies and that each have their own fiat currency. It can also serve as a high-quality collateral for loans. And what we have seen form over the course of the last 2 to 3 years is actually a well-developed ecosystem where you can trade, store, and also get loans against your Bitcoins and other crypto assets. And another thing which speaks in favor of Bitcoin, or something that it's maybe actually comparable to, is that it has gold-like qualities. So it is durable, it is impossible to counterfeit a Bitcoin, but on the plus side, it's easier to transport than gold, and it's easier to store. So it doesn't need any sort of vault, it doesn't need large ships to transport it around the world, it can be easily sent. And we are seeing basically on a daily basis now transactions worth hundreds of millions of dollars that are sent for a fee of maybe $3 or so. Now, when we think about these inflation fears and what we actually want to protect, or what people investing in Bitcoin actually want to protect to some extent, is their purchasing power. And this is why here we have a chart against where Bitcoin is priced against not the US dollar, but against the price of soybeans. And here we can actually see that, yes, Bitcoin has been appreciating a lot, but due to the recent bull run that we also saw in commodities, partially due to the COVID crash, partially maybe also due to some inflationary pressures from the monetary policies, and we can see that it's not as crazy as against the US dollar. So since its all-time high in 2017, compared to priced in soybeans, Bitcoin is up 84%. So here it managed well to keep its purchasing power. And another metric that I like to look at, and that I think is quite important, is does Bitcoin manage to outperform the newly printed money? So if we look at the broad money supply M2, this is a chart of the Bitcoin market cap against the broad money supply M2. And of course, the broad money supply has seen a tremendous increase over the past year because of the measures that have to be taken due to the shutdown of COVID and so on. But also in this case, the market cap of Bitcoin rose at a faster pace than newly printed money came into the economy. And that's also a good sign, and that's also a sign that part of what is being printed somehow, as it trickles down the economy, finds its way into cryptocurrencies. Now that we've heard a lot of arguments in favor of it, what actually are the risks with Bitcoin as a treasury asset, and what speaks against it? And I think one of the major risks that people like to bring up is that governments could actually ban it. Would not be the first time that the government decides to do something like this to protect its monopoly on a currency. We have seen it in the US, who has banned private ownership of gold from 1933 to 1974. We are seeing it now in China, which actually for quite some time already has prohibited fiat to crypto exchanges, and it's only possible with maybe through some OTC deals for Chinese people to actually invest into these cryptocurrencies, or a ban on payments, like we saw very recently from Turkey, where the central bank decided that cryptocurrencies are not legal for payments, for use in payments. We also hear voices, for example, from Janet Yellen or from Christine Lagarde, that with adoption, with the mainstreaming of cryptocurrencies, the regulatory scrutiny will of course arise, and it needs to be well understood what potential risks come with it for financial stability and so on. Now, another point which is a bit more crypto specific is, might there be competition for Bitcoin? So Bitcoin is of course the oldest and the most trusted cryptocurrency, but who knows how this is going to look in 5, 10, 20 years and so on. So will there potentially be a currency that has some properties that are better, or that are superior, and that can actually make up for the massive trust that Bitcoin has gained so far during its lifetime? Another point which companies investing in cryptocurrencies need to consider is what about the volatility? So the Bitcoin volatility is still very high. It's much lower than it used to be, for example, 3 or 4 years ago, where we had annualized volatilities of way above 100%. Now it's more in the 60% range, maybe 70% now. Actually, in this case, the volatilities of cryptocurrencies tend to increase with the price, which is a bit counterintuitive compared to equities. But overall, the long-term trend for Bitcoin's volatility is declining. So this may be a factor now, but might not be as much as a factor in 5, 10 years and so on. Then there are also some technical aspects. So for example, what if there's a breakthrough in quantum computing? It looks like we are still very far away from that, and like we will have many bigger problems than Bitcoin if actually some way to crack our current encryption methods is developed. And then there is also the centralization from mining potentially. So much of the mining is happening in China at the moment. We'll see a chart of that in just a moment. So that could also be a risk that if this that China has a too large influence of what actually happens with Bitcoin. Last but not least, for a company, of course, also important to consider is what are the reputational risks. So cryptocurrencies, of course, they are much more accepted today than they were 2 years ago. But there's still some open questions, for example, related to Bitcoin's energy use. Bitcoin uses a lot of energy. The good news is that a lot of this is coming from renewable energy sources. And in some parts of the world, it has actually helped to increase the amount of renewable energy that is being used and that is being produced by the country. And then another reputational risk might still be that some people think that, well, cryptocurrencies are only used by criminals or are used by criminals a lot. So, for example, in the darknet and so on. And we'll have a quick look at that this is actually not the best way to use cryptocurrency simply because a blockchain is very transparent. So you can very well see what is going on, and it's easy to track when somebody transacts in this. And it would not be the first time that a criminal actually gets caught simply because they used a cryptocurrency and because some of the identities could then be linked to them. So on this chart, we can see the geographic breakdown of Bitcoin mining. The large part of Bitcoin mining happens in China. That is still the case today, but others like the United States have picked up a lot of market share in the last years. United States, Russia, and Kazakhstan each have about 6 to 7% of the total Bitcoin mining hash rate. So while this is a concern, the recent trends that have emerged is that more of the mining power is distributed globally, and it's not as concentrated in China anymore as it used to be. Now, I mentioned that the blockchains are incredibly transparent and everything can be tracked, and I would like to showcase this as we have done it in a little sidebar in our publication as well, where we have a look at the purchase of Tesla, where they bought Bitcoin. And on this chart, which we got from an on-chain data provider, Glassnode, what we can actually see is transactions with exchanges. So whenever somebody sends Bitcoin to an exchange or withdraws Bitcoin from an exchange, for example, to put it instead of from an exchange into a professional custody solution, you can actually track this on the blockchain. And in January 2021, what we saw was a lot of outflows. So Bitcoin were withdrawn from Coinbase, huge amounts. So we had several withdrawals that were about 5,000 Bitcoin in a single transaction, more or less. And then also one very large spike of around 17.5K Bitcoin. And unsurprisingly, this was just before Tesla announced their large Bitcoin buy of around 48,000 Bitcoins. So you can actually see directly on the blockchain that something is going on. And this is just to show again that these are really transparent systems. And there's, of course, a good side to that. And there's also a bad side to that, because you need to be able to at least hide your intentions a little bit. And that's actually not very well possible if you transact on the blockchain, because anyone can look up all the data that is publicly available. And now here, just to show that if we look at the balance, the total balance of Bitcoins on exchanges, so how much Bitcoins are held in cryptocurrency exchanges, that has actually decreased a lot since the Corona crash. It started in March 2020 at around 3 million Bitcoins that were held on an exchange or on various exchanges. I have to say it's an aggregate metric. And this has decreased to around 2.5 million Bitcoin, where we stand now. So this is a clear sign that the people are purchasing Bitcoin and then taking them into their own wallets, so they're accumulating throughout this price rise. Now, to get back to the actual topic of our latest publication and of this presentation, what should a company actually consider? What sort of playbook do they need if they would like to get involved in cryptocurrencies and in the crypto markets? And here we have outlined a few steps that we believe should be considered. First of all, the strategy needs to be well defined, and the policies. So, for example, how much is purchased, when is it purchased, and who within a company is responsible for that. Then maybe equally important is to research the fundamentals of what is actually being invested in. So what is Bitcoin all about? How does it work? And then also educating staff on these topics. Then the crypto markets and the crypto assets are still very new and very special. So it is definitely also recommended to work with legal, finance, and tax experts that also have a lot of crypto know-how, because the treatment of this is still not very clear in some aspects, and this needs to be well figured out before making such a move. Then once that is settled and the plan is laid out, the question is then how to actually enter the market. Cryptocurrency markets have become incredibly liquid over the past 12 months. So it is now no problem at all to purchase even large amounts, as is showcased by the purchase by Tesla. 1.5 billion, it barely moved the market during the window where they purchased the Bitcoin. Then only at the announcement that they did it, and the crypto markets actually reacted impulsively. So it's important to think about how to enter this market. It's now very well possible, but there's still some finesse to it. So finding the right partners for execution is another step in the whole process. And then step 5, which is storing the newly purchased crypto assets. And there are now many professional crypto custodians out there that have a very high levels of security, that are audited, and that are able to serve the needs even the highest needs of professional institutional investors. So I think we have come a long way in terms of crypto custody over the last 4 years or so, and it's now actually easily possible for a company, for an institution, to safely store crypto without having to worry about it. And then as the last step that we also outlined is to secure the IT infrastructure. So of course, if a company holds Bitcoin on their balance sheet and declares so publicly, that also makes them a target potentially for hacks, especially if there is some sort of single point of failure within the system. So it's very important to avoid this and to create resilient systems that can actually withstand such cyber threats. So now I would like to come to the key takeaways and to summarize again. What have we seen? We have seen increased interest in crypto assets for various reasons. Treasury allocations for large companies such as Tesla, MicroStrategy, Square, and many others that have decided to allocate parts of their portfolio to Bitcoin or other cryptocurrencies. And one of the arguments in favor of it that people often bring up is fear of adverse effects of monetary and fiscal policy. So what central banks and governments are doing, there needs to be some way to hedge against potential consequences. And then the other case is that we are now in the 21st century. Maybe a golden rock is not as attractive as it used to be, and Bitcoin can serve in the future the role that gold served for thousands of years. Now, what would be the case against Bitcoin, or what are the risks? Of course, investors could lose faith. Let's say if a government decides to very aggressively regulate cryptocurrencies out of existence, or at least out of existence as much as possible within its borders, or out of ownership for the people of that country. And then there are also some technological threats, which is something that, of course, needs to be tracked and that people need to be aware of. So now the only question that remains is to get involved or not to get involved. This is, of course, for everyone, for himself or herself to decide. But what is clear is that the move to crypto requires a well-planned strategy. And for this, we also have the playbook as presented in our Themes publication. And that's already it from my side. Thank you again very much, and happy to take any questions.
Thank you very much, Raphael. Very insightful, and I think that gives a good overview of the publication. I would have maybe just a couple questions to follow up. You mentioned that the purchases of Bitcoin by Tesla and also by MicroStrategy did not move the markets. If you look back and analyze those purchases, did they have any effect on markets? Did they have a stabilizing effect? Is that something that can be seen in the on-chain data, or is that not really of a major effect?
Well, I think you can definitely say that it had maybe a stabilizing effect. So also, if you look back in 2017, you had cases where Bitcoin dropped 40–50% in a very short period of time. That has been a bit less the case in this bull run, and often when like Tesla purchased right after Bitcoin put in another all-time high and then started dropping back down a bit. And maybe some people were very fearful back then because just knowing the nature of cryptocurrencies, they can be very volatile. But at this point, it seems like Tesla has been purchasing, and that certainly had a stabilizing effect on the market. And then also MicroStrategy, which has purchased huge amounts of the supply that is available on the open market. So I think that has definitely contributed to stabilizing the market and also taking out sell-side liquidity.
So it would seem that since there were no major market movements during those purchases, that strategy or that plan from both MicroStrategy and Tesla, maybe others, was well thought out and well executed, instead of just jumping in and buying at market prices all at once. Would you say that's the case?
Yes, definitely. So it was also clear to see. So if you follow these markets very closely, you could see that something was going on, but it was not very aggressive how such large players entered the market. You could just see a very constant bit of the spot markets, and that's something that has characterized the current crypto bull run very much compared to maybe some of the later stages of 2017. That if you look at how much Bitcoin is being purchased through futures exchanges and on paper contracts, on margin and leverage and so on, versus how much is actually bought of the actual asset, how much physical, well, not physical, but physical Bitcoin is being bought in comparison to how the futures markets trade, you can see that this has really been a spot-driven rally. And I think that's where, of course, these large players played an important role.
Mm-hmm. I'll take one question as a follow-up to that from the audience. If corporations have entered the market with cryptocurrencies and then need to liquidate large amounts or all of their positions in Bitcoin, what might happen? Or is there also the possibility for them to exit their positions in a way that does not dramatically affect the market?
Yeah, so like I said, crypto markets have become incredibly liquid. So if you are a company that is that holds anywhere in the region of 50 million to 100 million worth of Bitcoin, that really doesn't move the market anymore very much. So it's no problem if of course, if everybody just decides to sell the asset at the same time for whatever reason, then that would create some sort of a crash. But that's not special about Bitcoin. That would be the case for all assets. And I think it's definitely something that is worth considering. So how much risk are we taking on in this case? What if we have to liquidate it at a bad time, basically at an unopportune time? But those are all considerations that especially matter for extremely large amounts, but anything up to 50 to 100 million can be traded very easily in these markets of today. The spreads are tight, even for such sizes, and it really goes to show how much more mature this market is compared to maybe what we saw in 17, when we didn't even have futures on the CME, for example.
Mm-hmm. And one more question before we move on to our discussion. You were looking at the mining centralization or the mining concentration, also tied to the hash rate. So if perchance a large portion of the hash rate from China were to go offline, we could still consider that the Bitcoin network is extremely secure, having been proven over the years up until now. Is that correct?
Yeah, I mean, so we have actually just seen such a case where there was an accident or several accidents actually in coal mines in one Chinese province that may have led to a temporary drop in the hash rate. So some miners having to shut off their equipment or not getting any power anymore, but still it caused some turbulence in the fee markets, but overall it was not a big problem. And I think what's important to understand about Bitcoin miners is that they are always just looking for the cheapest electricity, and they will move wherever that is, basically, because that's such a large it's such a large part of their profit margin. If they can decrease their electricity costs, that they will happily move wherever that's possible. And so let's say if something like that happened, then the hardware is not gone. In this case also, the power came back up, the hardware was turned back on, and everything went smoothly again. So I think it's not something to be extremely concerned about, to be honest. And it's also there is an incentive anyway to move wherever there is cheap electricity available, be this in China, be this in maybe Iceland, or in any of the other coal countries where you don't need to expend a lot of energy for cooling. So I think it is a risk, but it's often overestimated in my point of view.
Very good. And the last question from the audience, we'll take this one more. If a corporation would decide to buy a large amount of Bitcoin, would they also, or should they also consider to hedge it via the futures market?
Well, it depends. It depends what your goals are. I think that cannot be in general just said whether you should hedge it or not. But of course, if you the main concern should be liquidity. Where can you get the best price? And if that's via the futures market, and so that you first hedge your position in the futures market and then you unwind to actually get the cash, or whether you just go into the open spot markets, I think that's a very specific question that has to be analyzed at the time. In principle, in general, the futures markets are more liquid, so for large amounts it may make sense.
Very good. I think with that, we'll move on to the second part of the event today. Raphael, that was very, very insightful, and look forward to the next publications from Bitcoin Suisse Research and Bitcoin Suisse Themes. Thanks for that. I'd like to move to our panel discussion and welcome some more participants to the discussion today. We have 4 participants now from, as I said before, different perspectives. First of all, Mr. Günther Dobratz from PwC. He is a partner at PwC, also in charge of the legal practice at PwC, and if I may say so, a very strong proponent of cryptocurrencies and blockchain on various fronts and on various continents around the world. Jean-Michel Payon is from Ledger, and he is involved in the enterprise solutions for Ledger. Also, we have Pascal Meiser, who is the UK correspondent at Finanz und Wirtschaft. And last but not least, Mauro Casalini is the CEO at Bitcoin Suisse Liechtenstein. So following up from the presentation from Raphael and the discussion, and also seeing what has gone on in the last few months. Maybe a little bit of a controversial question, but is it more greed or fear that is moving large corporations to add cryptocurrencies to their corporate balance sheet? Are they more afraid of fiat devaluation and inflation, or more interested in becoming a superstar or in boosting their balance sheets during a Bitcoin bull run? What do you think?
Or maybe I start off.
Sure.
And obviously, it's my personal view, not the company view. But no, if I have to put it into the buckets, I would say it's greed in a positive sense, because what is, I guess, happening is that people are starting to understand Bitcoin or any cryptocurrency in that sense, and the features it has, right? I mean, there's complexities and so forth that come with it, and Rafael has done a very good part in explaining that. But after all, I think it's really the trust that is being built up and the nature that's being seen.
Mm-hmm.
On my side, if I can, sorry.
Go ahead.
If I can complement what Gunther just said, actually, I think that, and funny enough, actually, 20 years ago, I began my career as a corporate treasurer myself at a clearinghouse for, so that's funny because I'm now in another situation. But putting myself in the shoes of a corporate treasurer right now, I would say that actually, at least the one that I met, they are not necessarily looking for, they are not greedy or they are not fearing some kind of hyperinflation. They are only looking for diversification. And they are basically looking for diversification because, as you know, depending on the country that you're in and the type of currency that you want to protect on your balance sheet, whether it's the Swiss franc or whether it's the US dollar or the euro, most of the time, at least for the euro and the USD, you don't get much reward of getting your own currency on your balance sheet. So basically, they are looking for a little bit of more reward on that and diversification. So that's mostly diversification because most of them are not entitled actually to take a lot of risk with their corporate treasury investment, I would say.
So a balanced approach and practical approach. Mm-hmm.
I would definitely add the same as Jean-Michel, and I think it's some kind of, if we really speak about greed and fear, it's some kind of greed because of fear, because yes, they need diversification and they need to find solutions how they can work in times where the US and EU and everyone prints money as hell, and we do not really know what happens, and therefore diversification is important. And so yes, for me and for me personally, definitely Bitcoin is the future store of value, or is the digital store of value, and that's what a lot of people start getting, and therefore they look for that and they realize that that's a really good way to store value and therefore diversify your treasury portfolio.
Mm-hmm. Pascal, in some conversations that you've had, do you have a sense?
It's quite interesting because here in the UK, I get completely different signals. So the few companies they might be interested to diversify into cryptocurrencies, they're more kind of show off. So they want to show that they're at the forefront, and it's not really because they see a positive impact of that. And obviously, you have service providers here in the UK that offers this cryptocurrencies for corporate treasuries, but the demand is very, very low. So I think we don't see yet this trend towards cryptocurrencies from a corporation perspective, at least in the UK.
Mm-hmm. And following up on that question, would you say it's simply because they have something against cryptocurrencies, or they don't understand it, or they have better options for diversification?
I think it has more to do with the nature of a corporate treasurer. And I don't know if Jean-Michel knows what I mean. They're very conservative. They're not risk takers. They're managing the risk, and they try to avoid the risk as much as possible. So if it comes to asset allocation, they try to invest in the most stable asset you can imagine, mostly money market funds, and they just, and lots of them, they don't have the feeling for cryptocurrencies. They just see the big jumps in Bitcoin, for example, and that might look a bit frightening.
Mm-hmm.
That's my impression when I talk to companies.
And were you very conservative, Jean-Michel, back in the day?
Actually, I didn't have, as a corporate treasurer, has been said by Pascal, actually, you have to comply with investment framework and investment rules that are set by the board most of the time and that you have to comply with. And basically, if you don't respect the rule, you get fired. So yes, generally speaking, when you are a corporate treasurer, you are quite conservative because you have a certain scope of action that you should follow. Another topic that I just wanted, and sorry to kind of keep the mic, but I think that we should all remember that we are in year 0 of corporate treasury in investment in crypto, because all the great report that have been made by Raphael that I read 2 days ago is great, by the way. So thanks for that. And we are using this kind of document also for enabling the market adoption. But again, we are at the year 0. So, all the treasurers, they will have to go to those that are really fond of crypto, because they are quite convinced. They need to convince internally their board, their CFO, and then their board, just to say, hey, we could diversify somehow our assets, and we could allocate a certain part of our assets to Bitcoin, for instance, or crypto in general. But actually, it's mostly Bitcoin right now, as we speak.
Mm-hmm. So that's pretty clear on the conservative crypto treasurer attitude. What about the fear side of things? And maybe Pascal or maybe Mauro or Gunther also have a perspective on that. There are more talks of inflation. The Federal Reserve has said that its 2% inflation target is not set in stone. It can go above. There's been huge physical stimulus in the United States and some attempts at that in the European Union. Is this melting ice cube analogy from Michael Saylor actually relevant? Are people actually thinking about this, or is that just an isolated point of view?
Well, maybe I'll take it again and again. It's my personal view, not PwC's. I think, yes, you're right. Now the question is that something that has been kind of gripped and understood by the professionals? I'm not so sure. I'm there with Jean-Michel. The classical professional in this space is very conservative. Yes, they hear that, but I guess the fear can sometimes be greater than what you're noting. But I agree, it's true. And I think this is one of the reasons why people must be really looking at other options, Bitcoin being one of the key proponents of that.
And I think very important to look at, if we look at the Swiss franc or the euro, we have negative interest. So we can already see that it's melting. It's not only inflation, it's even negative interest rates. So they are looking for alternatives. And also, if you look at the stock market, why is it that high? Definitely also in some ways because people need to put their money in somewhere. So it's again back to the topic, yeah, you need to look at it because the ice cube is melting and the solutions need to be there. But Jean-Michel, you mentioned it with the internal guidelines you have, and that's also great in the report that Raphael wrote. He writes that they should make internal guidelines because of that, because it's something completely new, and yeah, no one would like to lose his own head. So that all goes together, and therefore it will take some time. And the point with year 0 is definitely a really, really good quote.
Mm-hmm. Before we move on to a regulatory topic, as we had one question from the audience on that, I found some information some time ago when it comes to the topic of holding, shall we say, risky assets or interesting new assets. I think it was reported by the Financial Times that in 2018, the Swiss National Bank, at one point, I don't think it's true today, but at one time, the Swiss National Bank held more Facebook stock than Mark Zuckerberg himself. And I find that an interesting move for a central bank. And is that perhaps some indication that even conservative institutions like a central bank have to or should look at new assets or risky assets or things that are new on the horizon? Is that an attitude that can develop over time, even for, say, Swiss companies or companies in Liechtenstein in Europe?
Well, I go again first. I would say yes, but then again, we must not forget the role, right? And obviously there's a lot of thinking going on, and now with kind of their own cryptocurrencies being brought forward, and in particular in the UK, and I'm sure Pascal has more to say about that, what they're thinking and proposing. But I think that at least they got to have a special group internally that looks at those new opportunities, which I believe is the case with the Swiss National Bank.
Mm-hmm.
And I think especially the national banks need to think about it, because also there was something mentioned that because national bank holds MicroStrategy shares, they hold Tesla shares, so they hold indirect also Bitcoin. So they definitely need to look at it, they need to understand it, because they need to know in what they invest because of their guidelines. And if a company holds a lot of their treasury in Bitcoin or other currencies, they need to understand that and need to take care of that also risk.
Maybe one remark to the stock holdings of the national banks. We shouldn't forget that they don't have an active approach to stocks. So it's a passive approach, and they just own that much stocks of the likes of Tesla and Facebook because they have such a big weight in certain indices. And if one day the weight of those companies drop in the indices, then obviously they will hold much less of them. And I think it's just well, obviously it's a temporary picture we have.
Mm-hmm.
And when it comes to cryptocurrencies, well, I think talking about national banks, they just stick to traditional assets.
And they always will.
That's a big question. I'm not in the in the committee who makes the decisions where to invest. So it's
Mm-hmm. Obviously,
I don't know what they're talking about.
Sure. Maybe that's a question for you to take up at some point with the conversation. One or two questions from the audience, just to jump in here. When it comes to counterparty risk for corporations holding Bitcoin, they could, when they hold large amounts of Bitcoin, somebody like Tesla or so on, what should they consider, or what is a counterparty risk possibility? Maybe Mauro, you could address that.
Yeah, in the end, Bitcoin is a highly volatile asset still. Definitely will get smaller and smaller the volatility that the more ease it will come. But definitely, yeah, if we have seen it with the stock market price or the share price of Tesla, what happened when they announced that they invest in Bitcoin, the price dropped, and it was a surprise for me, but it showed again that traditional investors, some of them are in crypto already, some put their treasury funds in crypto, but a lot are still not there. So it's still it's a counterparty risk, even on a not only on a monetary side, even on a marketing side, that some companies are scared of that. Therefore, they say, okay, if you invest in crypto, we are out. And also technically, I mean, we're very happy about those entities that are already there holding licenses and so forth, but the flora and fauna of those licensed entities globally is still rather small. We expect it to grow and grow exponentially, but obviously they're quite limited in terms of who they can work with, which obviously increases the risk of piling up risk, if you like.
Mm-hmm. And you mentioned the growing ecosystem, Gunther. There's also a question about the possibility of using crypto assets for short-term loans in fiat and so on. And Raphael mentioned that from the paper. So there is some more development of service providers and possibilities for companies to hold a crypto asset, but then also to use it in various, shall we say, creative ways in their treasury strategy.
Yeah, but obviously it's linking back to something Raphael said a couple of minutes ago. It means that there's new risk being added to the cake. So you got to make sure that they really understand what they're up against, because it is not classical volatility, not classical risk as such.
Mm-hmm. And then let's come quickly to the regulatory risk topic. And this is now more questions for the lawyer among us. There was a question earlier about new regulation from the EU. We also we have some concerns perhaps that Bitcoin could be banned. Do you see that as a legitimate risk or even possible risk, given the decentralized nature of cryptocurrencies?
Obviously, the lawyer in me has to say yes, but do I believe that? I mean, we're talking about the EU. No, not really. Again, my personal view rather than the firm's one, but obviously in other countries we are seeing that. If you look at China and so forth, with limitations that are not being on crypto, but on some of the things that are being done there and so forth. So yes, the risk is there, but right now I don't see it immediately. So with the current stuff, the current regulation that is being prepared in the EU, obviously we still have to wait and see the details, but I'm not seeing any ban coming up.
And if you look at what with, especially on the broader picture, if FATF travel rule happens, it's definitely, on the short term, it will bring in some problems. It's difficult for some tech companies, but in the long term, it will legitimize it. It will help us. The regulation in the EU with markets and crypto assets, MiCA, what we have seen until now, as you mentioned, Günther, looks not bad. It looks good, and it will help companies to address people even more actively, for companies that are listed on the stock market, that they are allowed to invest, that it's easier for them because a regulation is there. So from my perspective, the regulation we see at the moment happening in the EU will, if it does something, it will help to skyrocket it mid to long term and not to block it.
We talk here a little bit about Europe, and when we talk about Bitcoin and other cryptocurrencies being decentralized assets with various aspects and reach around the world, global currencies in a way, turning to Pascal, and this is perhaps a bit a geopolitical question. The UK now out of the European Union, and perhaps there is more currency risk or more geopolitical back and forth among different countries. Do you think this could be a factor that people consider? Well, holding the British pound, holding euro, holding the US dollar, what is the US going to do? Is there going to be another Donald Trump? Would this be something people consider when they might think about holding a cryptocurrency?
I'm not so sure about that, because I think the main currency in the UK is, beside the pound sterling, is the US dollar, because obviously lots of companies do a lot of business with the US or with US related or dollar related countries. And I think so the currency risk is from companies' perspective quite limited. But I think on the regulatory side, what could be a possibility that the UK will loosen their regulations, and that they will allow more things than the EU would have done. So it's I think they have more freedom to put out their own framework going forward. And it wasn't a topic so far, but obviously when time goes by, maybe it becomes on the table.
Mm-hmm.
I think I see the biggest chance there that the UK could loosen or could put their regulation more towards fostering investing in cryptocurrencies, and that this could have a positive impact.
Mm-hmm. One question from the audience, and this comes a bit to what you just said, Pascal, maybe also to address to Günther. When it comes to accounting rules around holding Bitcoin on a balance sheet, it is perhaps generally understood to be an intangible asset, but is that right, considering that it could be transferred into cash and marketable in some cases as a security? I don't know if that is correct, but how is the accounting treatment of Bitcoin on a balance sheet?
Well, I think I'm not the accounting specialist. I don't know the exact rules. I don't know if Günther can add something here.
No, I'm not an accountant, so I need to check with the colleagues. I think I know, but I'm not sure.
Okay, better safe than sorry. then we won't pursue that topic right now. But I'll turn back to Jean-Michel, because as we've seen in what was shown in the presentation from Raphael, large companies, Tesla, MicroStrategy, buy Bitcoin, then they move it off exchanges into secure custody, which is obviously an interesting angle for a company like Ledger, also Bitcoin Suisse, with the Bitcoin Suisse Vault. That's the strategy so far. Is that the only strategy that is currently viable and the best strategy from a technical point of view? Because then transferring in and out, changing, trading actively also brings other technical risks. What would you say, also with your hat as a former corporate treasurer?
Yeah, for sure. I think that if we go just step back for a minute, actually what we just said before is that actually we are in year 0 of corporate treasury adoption of Bitcoin. And therefore, I think that the kind of, at least on our side, the kind of interaction we have with corporate treasurer, again, they are mostly, not mostly, they are all buy and hold. So basically they buy, directly, they want direct exposure to the Bitcoin mostly, and they want to keep in their accounting books, and they don't want to trade it at all. So basically it will be investment held for, probably 3, 5, 10 years, something like that. So on that perspective, I think that they are not necessarily looking for active trading capability, but it's only for now. And again, we are at the beginning, so it will probably eventually change. Where I see myself as, again, a former corporate treasurer a long time ago is a more structured product that would give you exposure to the asset class and maybe direct exposure. So basically that would enable you to actually keep the Bitcoin on your balance sheet. And just as a corporate treasurer, you have an exposure to a currency, and you might have a little bit of financial instrument, derivative instrument to protect your position. You could have also these kind of things coming up for certain kind of exposure. That's my own feeling. But again, I have not yet seen that kind of example for real in a client or prospect business case. But I guess it will be more and more common, especially in the US, where obviously the adoption by the corporate is actually a little bit more advanced than what we've seen in Europe.
Mm-hmm. Do you have anything to add to that, Mauro?
Yes, only from my perspective, it's and that's where I could link to PwC, a problem that the audit companies have. If you tell them, yeah, we have on this hardware wallet or a paper wallet stored thousands of dollars or millions of dollars worth of Bitcoin, they will tell you, yeah, oh, that's hard for us to audit. How is the access really possible? Who tells me that it's really there? And therefore, companies like Ledger Vault or Ledger Enterprise or also Bitcoin Suisse Vault come in, and we have audit reports. We can show that to PwC. They are happy with that, and then they say it's fine. So put it in your balance sheet. We are happy with that because we can audit it, and that's also very important, especially for treasurers. They need to have something that an auditor can look at and not store the crypto somewhere in the internet on a whatever vault. So that's also great where these big developed companies like Ledger Enterprise, Bitcoin Suisse Vault, BitGo, and others are very important for the whole community.
And I'll come back to. Oh, excuse me. Go ahead.
No. Sorry. I just wanted to agree totally, and I think that again, it's for everybody in that call. It's important to understand that yes, Bitcoin has mostly been driven by retail adoption. So you and I, people basically that invested in crypto for the past 5, 6, 7 years. But now is the time of the corporates and the institutions, and those need different solutions for exactly the same reason that has been explained by Mauro. So I think that yes, there is a dedicated place for new offering and new technology to target that, because the needs are different from the corporate treasurer and from the retail investor.
Well, thanks for this one, Mauro and Jean-Michel. I could not agree more. Obviously, I'm not an auditor. I'm in the legal field, and obviously, we have been advising most of the companies in this space, which obviously is a great honor. But also, PwC has started to audit them with all the problems that you mentioned, and I think it will change everything. An audit 10 years from now, or maybe 5 years from now, will be like totally different, and blockchain will be an essential part of that.
So that means that every lawyer will need to understand solidity and coding and be able to run penetration testing and many other different kinds of technical topics as well, correct?
Good luck with that. I can't do that, but I believe in it and I still invest in it, right? So call me stupid, but at the end of the day, it's also good if you just believe.
Sure. Maybe to come back quickly tomorrow with one question from the audience, a bit on the accounting point of view, the question being, what about the liquidity and capital ratio requirements? Bitcoin then is not considered HQAL and is less attractive to hold. Do you have some insights on that also from former banking days? Or
there's always the question what kind of company, or if you're a bank and hold cryptos on the balance sheet for your clients, definitely then it's quite expensive. But if you as a company by yourself hold crypto on your balance sheet, you do not have an issue with that. So it's an asset there, it's shown, I do not see the problem there if you are the holder of cryptos by yourself as a company in your treasury, but possibly Jean-Michel or someone can add something to that.
Jean-Michel?
Yes, I think generally speaking, so it's not exactly answering the question, but I would say that my belief is that actually there's a lot of things that will actually be built, around what we talk about, which is technology and security. And actually, if we have the chance to maybe take that panel, in a year or 2 years from now, I think that we'll have a very different answer and actually a much more developed ecosystem around us. So that's really something that I wanted to highlight, is that there's a lot of people that are working to make the investment of institutions and corporate much more secure by definition, because that's what we do at Ledger, and that's what Bitcoin Suisse is also doing. But I think that around that, there will be a lot of things that will happen in the ecosystem of consulting firms, lawyers, and things like that, that will actually make the Bitcoin investment case much more institutional ready, so that it eventually become a kind of asset in itself, and that you basically have you cannot say that I don't want to invest in Bitcoin for bad reasons, I would say. But sorry, not to have understand exactly and answer the question of Mauro.
Mm-hmm. So we're coming slowly towards the close of our discussion, and before we wrap things up, I'd like to do a quick round with everybody. Again, thanks very much for your insights and for the commentary. Just when we think about perhaps Switzerland in particular, and Liechtenstein, and Europe in general, I mean, most of what we've seen from the large corporations investing in Bitcoin, these have been US companies, rougher investment in the UK, but most of these companies are in the US, perhaps a bit more open to risk, and so on and so forth. Will it just take time, more or less, for European companies to consider this and to take the next steps? Are they perhaps waiting for more advanced and experienced service providers? Maybe just 2 or 3 words from each of you. What do you think it will take for the next step, and will it actually go forward? Will this become a trend going forward in general, or is this just kind of a flash in the pan from a few companies who are profiting for the short term?
Well, I think it will go forward. Unfortunately, and probably it's true, that Europe, if I leave out the UK, is not the most adventurous part when it comes to new ideas. So probably we're taking a little longer, but still my hope is that Europe will be catching up.
Mm-hmm. On the UK side, Pascal, would you agree there's a bit more of a adventuresome spirit there?
Well, I think we have to realize that most of these companies that have invested in Bitcoin, these are mainly the founders who did this decision. So it was Elon Musk, it was the CEO of MicroStrategy, who was, I think, was also the founder. And obviously they have a completely different approach to allocate money than if it's a company with a corporate treasurer who has to be in line with the investment strategy. maybe we just need a different generation of entrepreneurs. Maybe if a younger generation that are building up companies with a closer tie to cryptocurrencies, I think that could help to set this trend. I think so far we haven't seen really a trend. It's just a couple of companies that did this so far.
So a couple companies doesn't make a trend, is what you're saying.
Exactly. So I think we don't see companies queuing up to do the same so far. And the question is how much time will it take to let it be a trend?
That's also a fair point that you bring up about founder decisions versus perhaps more complex governance structures within companies. When you have larger corporations, think ABB or Nestle or so on and so forth, you have many different levels of governance, and so for a decision like that to go through would take much longer. Yeah, probably also a fair point. Any other?
Maybe just one last point when it comes to UK. So I would agree with Günther that obviously Europe and UK, they are not at the forefront of these things.
But go ahead.
Yeah, and I also agree with you, Pascal, with the entrepreneurial thinking and the CEOs who made the decisions. And I think also we always come back to the topic that's very interesting for Günther, the regulation, because the more regulated the space is and the more internal guidelines we have, the happier the people that work in Treasury to take that risk, because the risk gets smaller, and even if money gets lost, they can say, look guys, it's regulated, we have our internal guidelines, so it's fine. So I think it will take on and take on and take on. And as mentioned in Europe, we expect in markets and crypto assets regulation, MiCA 2024 to be in place. So it's a long time, but 3 years is nothing. So if that happens, definitely I see that's really a good opportunity that more and more companies will take Bitcoin serious and take it in their balance sheet as an investment and as part of the treasury. And
you, Jean-Michel?
Yeah, on my side, I believe actually I concur to what have been said previously by all the panelists. But I believe that yes, what we need now, especially for Europe, is not a MicroStrategy. It's as has been said by Günther, it's a Nestle or LVMH announcing that they will invest. It doesn't need to be a big amount. It might just be 1% of their treasury, because with 1% they are not taking a huge risk, I would say, and the kind of risk reward profile can be quite good actually. But having this kind of big corporates with a lot of governance, listed company with a complex governance and a board, etc., that is announcing officially that they invest 1% of their treasury in Bitcoin, that would be, I think, probably leading the way for Europe again, either Nestle or LVMH or companies like that. That would be great.
Very interesting. And maybe just a last point from my side, and following up the news that came out this week, where we did see WeWork announcing that they would accept crypto payments and then hold these assets on their balance sheet. I think that's a bit of a different trend than we have had so far from companies which, whether it be Versicherung or some others which accept crypto payments, but then immediately change that into fiat currencies. Perhaps that's a different road into the acceptance of crypto on the balance sheet when it comes in as a form of payment and then is held. And perhaps that slowly brings people into thinking of things a little bit differently. With that, I'd like to wrap things up. And again, many thanks to all of the panelists who joined today. Thanks very much to Raphael for the presentation earlier. We look forward in the next event, perhaps in a couple of months, together with the Crypto Valley Association, to present the next Bitcoin Suisse Themes paper. I can't tell you yet what that may be about, but I'm pretty sure it will be an interesting topic. So we'll look forward to sharing that with you again. Thanks again, Jean-Michel, Mauro, Pascal, Günther, and to everybody who joined today. Have a good evening and wish you all the best.
Thank you very much. It was great.